you never stop adding to the position of your company, and you have a lot of courage because there's been a lot of major swings in the past. And there were times when I was worried. Can you tell me, were you ever close to margin calls? Anything ever happening to MicroStrategy?
Well, when Silvergate Bank failed, we had to redeem that, but it turned out to be a benefit for us. We made a lot of money on that redemption. We repaid our Silvergate loan.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Michael Saylor, MicroStrategy Executive Chairman, joins Squawk Box to discuss the company's Bitcoin investment, what MicroStrategy the company still does, and the impact of new ETF on the price of Bitcoin.
But it's been a great journey. Since August 10th of 2020, MicroStrategy's bought about $8.3 billion worth of Bitcoin, and Bitcoin's up 44% a year on average since then. The S&P is up 12%. And since we levered it, we're up 825%. The number one performing stock in the S&P is NVIDIA, up 821% as of Friday. So we beat every single company in the S&P index using a Bitcoin strategy.
Does MicroStrategy now do anything else?
We still run the software business, and it's generally a cash cow for us. But our primary business is a Bitcoin development company. So what we're doing is we're securitizing Bitcoin. We're selling convertible bonds for people that don't want the full volatility and all the risk of Bitcoin. Some people want 150% risk, right? So some people want highly levered equity, and they trade the options. And so we have a very big, deep, rich options market. We've got high-performance equity, and then we've basically pioneered the Bitcoin-backed bond market by issuing all of these convertible bonds that are backed by 5x more Bitcoin collateral.
Bitcoin experienced a 7% drop between September 5 and September 7, but it managed to maintain a daily closing price near $54,000 and later recovered some of its losses, reaching $55,300. This movement mirrored the price action in global stock markets, but several factors, including anticipated inflation data and growing risks to the dominance of the United States dollar, can help explain the rise in Bitcoin's price. The S&P 500 index futures rose by 1.4% since hitting their low on September 6, as investors grew more confident that the U.S. central bank would cut interest rates to stimulate the economy in the upcoming months. Economists are predicting a slowdown in inflation, which has historically been a hurdle to implementing a less restrictive monetary policy. A 2.6% year-over-year U.S. CPI increase is anticipated for August, with the report due on September 11. The impact of lower inflation on Bitcoin is not straightforward or entirely clear, given that part of the cryptocurrency's appeal has been its hedging capability due to its fixed monetary policy. However, some analysts believe that Bitcoin's price benefits from increased liquidity in the system as businesses and individuals gain access to cheaper capital and yields on fixed-income investments decline. User Apps32 took 2x Social Network to demonstrate that the previous interest rate decline cycle in the U.S., which began in 2019, initially spurred bullish momentum for Bitcoin, although this proved unsustainable in the medium term. Nonetheless, the analyst posits that a potential correction to the $45,000 to $55,000 range could offer an excellent entry point for the survivors. Consequently, it is prudent to regard any bullish predictions for Bitcoin's price due to a decline in interest rates with skepticism. Some contend that Bitcoin's greatest threat comes from competition with tech stocks, whether due to extended periods of correlation between the two assets or simply because these companies provide dependable cash flow and growth opportunities amid relative scarcity. Regardless of the monetary policies pursued by the U.S. Federal Reserve, investor focus is shifting to the U.S. presidential election in November. The Republican Party and former President Donald Trump have proposed imposing 100% import tariffs on countries that bypass the U.S. dollar in international transactions. Recently, nations such as China, India, Brazil, and Russia have considered moving away from the US dollar by using cross-collateral transactions. In response, candidate Trump has promised to uphold the US dollar's status as the world's preferred reserve currency, reaffirming this commitment at a Wisconsin rally on September 7, as reported by Bloomberg. Ulrich Lutman, a strategist at Commerzbank AG, noted that Trump's plan might inadvertently encourage countries to move away from the dollar, potentially undermining the safe haven status of U.S. Treasuries, according to Yahoo Finance. Lutman advises investors to consider Trump's campaign statements critically, acknowledging that not all promises may come to fruition. From a Bitcoin investment standpoint, a weaker U.S. dollar generally bodes well for its price, though it does not assure that Bitcoin will outperform traditional stores of value like gold, stocks, or real estate. However, the resilience of Bitcoin's primary derivatives demand metric should be viewed as a positive indicator.
Has anything changed in terms of, you think, the investor class that's investing in your stock versus now investing, for example, in an ETF? Obviously, one is more levered than the other.
Yeah, if you're investing in the ETF, you're getting one-for-one performance, paying a 25 basis point fee, no yield. When we issue a $1 billion convertible bond paying 1% interest, we're capturing a 50% premium or 50% type BTC yield on that up front, and then we capture another yield on the back end. So if what you wanted was a sort of a tax-deferred yield on your asset, or you wanted to tap into the convertible bond market, like if you wanted to borrow $1 billion for a percent,
right,
buy Bitcoin with it, hold it for 7 years, you can't do that as an individual, but MicroStrategy can do it.
What have you made? Right now, I think I just saw a headline that $1.2 billion in outflows took place out of the Bitcoin ETF. And I'm curious, sir, what you think is going on with the impact of the ETF on the price of Bitcoin.
I think generally it's been a good thing, and it's created more demand. But you got to keep in mind that Bitcoin is smart, fast, strong money. So on a Saturday night, if you're worried about a missile strike, you can't teleport your $10 million apartment to Singapore, lever it up 10 to 1, and short $100 million worth of New York real estate. But you can short $100 million worth of Bitcoin by borrowing $10 million. So you have a lot of fast money traders, a lot of volatility, and that will cause and ripple into volatility in the ETFs.
Can you explain?
That's okay.
Can you explain this? So, one of the things you just talked about, if there was a missile strike or something, there was a sense that people talked about this as digital gold. And maybe you still think that's the case, but it often doesn't act like digital gold in the midst of a missile strike.
Yeah, it's the most liquid, fungible, free capital market in the world. Your New York apartment's not fungible. It's not liquid. I can't panic sell it. So when there's a short-term panic, Bitcoin is trading really, really hard.
It's supposed to be the opposite?
Over the long term, it's up 44% a year every year, and you either get 12% from the S&P with VIX vol, or you take 3x the vol to get 44%. So over the long term, if you're an investor, it's going to be great because it's strong capital. Over the near term, if you're a trader, you get lots of arbitrage opportunities.
Bitcoin monthly futures carry inherent costs due to their prolonged settlement periods, with sellers typically demanding a 5% to 10% annualized premium to compensate for this risk. The annualized Bitcoin futures premium basis rate has stabilized at 6%, indicating that demand for leveraged bets on a price decline has remained consistent over the past week. Although this level is below the more bullish 8% from 4 weeks ago, the data indicates a robust market, supporting the strength of the $54,000 support level despite recent price volatility. The BTC/USD 4-hour chart shows a bullish divergence in the 4-hour RSI preceding the price recovery seen over the last 3 days. The RSI is a trend-following oscillating momentum indicator used to assess whether a market is overbought, oversold, or accumulating. A bullish divergence from the RSI occurs when a decrease in price is accompanied by an increase in momentum, resulting in upward movements. The bullish divergence could hint that the bulls are gaining control of the market and plan to push the price toward the 200-day exponential moving average at $59,000 in the short term. And do not forget to subscribe to Bitcoin Saylor. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.